This is the last price action video you will ever need. I'm not just showing you the most powerful candlestick patterns, I'm giving you the drag and drop automation for all of them. Tweezer tops, inside day breakouts, impulse imbalances, Doji. Fully coded, tested and tweakable in Profactus.ai, the #1 drag and drop no-code trading bot builder for everyone. And yes, you get the full system free. This is how you stop trading emotionally and start trading them like a machine. So stay until the end to get full free access to the price action pattern and more fully built trading bots. Let's get it. But why care for price action? Price action trading cuts through the noise by concentrating on the market's most fundamental element, price. Price action is the most powerful tool in trading, but most traders still trade it manually, hesitating, doubting themselves, and missing moves. Therefore, let me give you a very quick crash course about candlesticks and price action patterns before we dive into the nitty-gritties of each price action. Let's take a look here at this chart. We're looking on the daily time frame of gold traded against the US dollar. If you're not familiar with candlesticks, you're probably familiar with the line chart you see on the news. They are telling you one single information, which is usually the closing price of that day. So this is just one point of information. For example, here on the 18th of August 2025, the gold price closed around 3,333 US dollar. This is the one information you get. However, now we want to talk about candlesticks. Let's change it to candlesticks again. And by just looking on the one candlestick, such as this one, you do not only get the one information, the closing price, you get three more informations on top. For the sake of simplicity, let's solely look on those two candles, this red one and this green one. So there are two main types of candlesticks. One is a bearish candle, which is, for example, this one, the red one, which is simply telling you that the value of the underlying asset decreased in value during the day. And the green one is simply telling you that the value of the underlying asset increased during the day. So this part is really important. So let me iterate on what this means in reality. I will now draw the exemplary price development of this candle we're looking here on the bearish candle. So you get an idea why the beginning of this body is marking the opening, the close, the highest high, and the lowest price level. So here on the 13th of July 2025, the price opened at this price level. It somewhere developed during the day here to this price level, marking the highest value for the day. Then later on, price developed somewhere here, which is marking the lowest low, the lowest value for the day. And then the price, the candle closed somewhere in this period. So when you hear this the very first time, it might be a bit confusing and maybe overwhelming. I will give you another example now with a bullish candle to really make sure that we are nailing this part, because it is so crucial, so important, not only for algorithmic traders, but also for manual traders to truly understand the mechanics behind candlesticks, for being able to comfortably playing around with price action patterns. Now for this bullish candle, the day opened on this price level, at some point moved down here, moved up, and you see actually almost the close price equals the highest high. So it's a very strong candle to the upside. It moved a tiny little bit here down below, but marginally. So you see this tiny little line, which is like marking highest high, is pretty much equals the close price. Let me quickly make it visible. So here the candle opened at this price level. The lowest low was reached. Here we see the highest price point was somewhere here. So very, very close to the closing price. And the actual closing price is right there. Another important terminology is as well that we are also talking about in this video is the total candle size. That is simply meaning from the upper highest price, so the top wick, upper wick, down below to the lower wick. This is pretty much marking the complete size of this candle. So here talking about the total candle size. Then there's another terminology where we are only talking about the total body candle size. So this is only the size of the body of the candle. And another terminology is the size of the wicks. So that would be here, the size of the upper wick of that candle, which is very, very tiny, I must admit it. And also plus the wick size of the lower one. Why is this important? Because we very much care about the ratio of body to wick. So this candle we are looking here right now, the bullish one, is a prime example for a strong candle, because the price was very determined moving into one direction here, up, and the fluctuation to the downside as well as to the upside was very minimal. So here the body is, when I'm eyeballing it, taking up roughly 85-90% of the complete candle size, which is for us an indication for a strong move. And then just keeping this number in mind, 90% or 80% size of the body compared to the total candle size is marking for us a strong candle, so price is moving with force. This information we can later use in algorithmic trading as well to detect these kind of candles as a potential entry point. One example of the other extreme is when the wick size is actually so much bigger than the body size. Right now I'm just marking the size of the wick. You see here this bearish candle indeed. I'll make it a little bit bigger. It's very, very small. The price opened here, it closed here, but in the meanwhile, price moved in extreme to this price level and also at one point of time to this price level. So there was no clear direction in the market within this candlestick of the price moving in a certain direction with force. So here, again, eyeballing it, the body compared to the wick size is maybe taking up 5% rather less, even if, right? So this information we can use again to also then detect so-called imbalance candles where the body, this is the body, is in minority to the wick size. Very last terminology, but as important as all the other ones, are candle IDs. This is the last one, and then we get into the price action pattern. When we're talking about candle IDs, it's pretty much the identifier of the candle we are talking. Today, I'm recording the video on the 3rd of September, 2025. We do have 10 a.m., 10:24. So this is that candle. It's still in development. We see that the price opened somewhere at this price level. Currently, it's here. So you also see this candle slightly moving, right? Because it is still in development. So we are not entirely sure yet where it will close. Price also might move even further, so it might also not be clear yet that this highest high will sustain, same as for the lowest low. So, simple words, candle ID 0 is pretty much just the candle that is in development right now. It can be the day, it can be the hour, it can be the minute. Now, candle ID number 1 is simply said the candle before the candle ID 0. So today is Wednesday. So yesterday was Tuesday, so this is the Tuesday candle marked with candle ID number 1. Monday, candle ID number 2. Then no trading is happening on gold on Saturday and Sunday, so candle ID number 3 would be Friday, Thursday, and Wednesday. Wednesday from last week would have the candle ID number 5. That's it, that was the crash course, and now let's get into it with the fun part. The impulse candle, and it will then look something like this on your charts. These arrows will always mark pretty much the entries based on the system we've just created, right? So for example, here we see very clearly this is an imbalance candle, huge engulfing candle with a strong movement to the downside. So here we put a red arrow on top. Same here, imbalance candle with a small body, a lot of wick, and then a following candle, strong movement to the downside. Another example now for the upside here, we see pretty much only wick, almost no body, and then a strong movement to the upside, again marked with a green arrow. So this is pretty much how we imagined. First block we need, simply run per candle on top. We keep it on current. Then we will need a variable block, which we simply need here now is figuring out the total candle size. So we only need to pick it here from the list. Then here on the left hand side, we go for candle. And for the parameter, candle total size in pips. Candle ID number 2. Advanced options, we keep all as is on the current time frame. And then here, simply value 0. So we simply fetch the candle total size. Okay, close that one. Then what we do, next one, the trade rule block. One of the most used blocks we have on Profactus. Then we simply take here the value block, candle size based on candle size 1, adjust by a multiplier we have now still to define. So here simple multiplying it by x, create by now here a new input. Let's call this input MPL for multiplier. By default setting this to 3. So now we can select it here, MPL. Again, we close that boy here, and then we go back to this block. So this one has to be smaller than the candle total size. So here again, we pick the candle from the list, the candle total size in pips. from the candle ID number 1. So one candle before, not two candles before. We close that one. And now it's about checking, do we have a so-called 50% candle, imbalance candle, as we have learned just before. So here we take again the trade rule block, connect it like this. Let's call it the 50% candle. Now we change both here to candle again. Candle body size in pips this time. So we only want to really know without the wicks how big is the candle. Candle ID number 1 has to be bigger or equal than the candle total size. We want to not just say 50%, maybe we want to also see 70%, 30%, 5%, right? So here we add another constant. Actually, let's do this quickly. Input, and let's call it body size, and we make it by default to 0.5, so 50%. You see here body size, we have it available. And now we want to check, is the candle with the candle ID number 1, so the past closed candle, a bullish or a bearish candle. How do we do this? Again, we take a trade rule block, connect this one. Here again, we check the candle, and here we simply check, cool, candle ID 1, is the candle close higher than the candle open? Quick check. When the candle close is higher than the candle open, we have a bullish candle. So here I simply use the draw on chart block. So if the condition is true, this block will be triggered. And if this is not true, this block will be triggered. We simply quickly write here bearish then. Here we change it to candle ID number 1. Let's make it green for bullish candle. And for the bearish one, same logic. We simply change this to 1. Instead of green, we take red. And voila, we already figured out the impulse candle, this price action pattern, to work out now. So now let me put this here on top of it. Let's call it the imbalance plus impulse price action. So you know exactly what price action pattern is good for. Quick introduction to the impulse and imbalance price action pattern to simply detect movement in the market into a certain direction. In very few words, what is it? First, it consists out of two candles. One candle is an imbalance candle. For example, this one is an imbalance, simply meaning there's a lot of wick and a very small body going on, like here, or this is also a very good example, a lot of wick and very small body size. And then what we're looking for, this is one of the candles. The next candle is supposed to be a strong candle with a lot of body and a minimal amount of wick. For example, this one, the wick, as we can see, is almost non-existent of this candle. It's a strong movement to the upside, and the prior candle actually was an imbalance candle with a lot of wick. This one is a good one. So here, this candle is a very, imbalanced candle with no clear direction anywhere, a lot of wick, not a lot of body, and then a strong movement to the upside with another candle with a lot of body. And that is pretty much the whole purpose of this price action pattern. And now let's get actually into how to automate such a price action pattern on Perfectify. Let's continue with the next price action pattern, which is called the tweezers. Quick explanation. What is the tweezer? I'm here on baby pips. You have usually a top and a bottom tweezer. I will give you a quick explanation of the tweezer top, and then they will be just reversed for the bottom. So the tweezer top is a bearish reversal pattern, as we see it right here. Top of an uptrend consists of two Japanese candlesticks. So we're always doing it with candlesticks with matching tops. These are the tops here, these wicks. Here we see the body size. So pretty much we need at least two candles which are having a kind of a similar top, highest high point of time. So here the matching tops are usually composed of shadows, aka wicks, but can be the candles bodies as well. So doesn't need to be these wicks, can be also the body here, these ones. A tweezer top occurs during an uptrend when buyers push prices higher, often ending the session near their highs, but were not able to push the top any further. Quickly to the meaning, well, it simply shows there's an area of resistance that is interesting for us to know, and then you can simply use it at your disposal whenever it makes sense for your trading strategy. It's relatively long, it's relatively complex. Tweezer top, as I already mentioned it, the right hand side, the bottom is on the left hand side, and you actually see it's not just indicating, it's actually taking a trade. This is obviously up to you. If you really want to trade on this single price action pattern, there are definitely circumstances where this could be a viable approach, and I will just walk you quickly through this kind of price action pattern. Building this piece by piece is taking a little bit of time, despite its relative simple approach. It needs quite some planning, so I will walk you through. Here we start with a formula block, which is a pro feature. So here we simply define a variable which we define as upper wick size. So here we take the candle upper wick size in pips, dividing it here with the candle total size, again also in pip with the candle ID 1, and we are storing it in this variable. Then the next one, simply taking the candle upper wick size, also in pips, divided by the candle total size, pretty much the same stuff, just for candle ID number 2. So here you already see we are talking about 2 candlesticks. We have no stored, right, with these, thanks to these 2 formula blocks. Now you say, hey, we haven't this now yet in a variable. It's indeed an input, so you can find this in the input section of this price action pattern, simply having an impact or decision up to you also of how big the wick size must be to flag this as a viable tweezer bottom in that case, or actually tweezer top, pardon. Then if this condition is true, you do the same stuff also with the candle ID number 2. Then you also want to check, is the candle close higher than the candle open? If yes, cool. Let's check this also for candle ID number 1. So the one candle has to be bullish and the other one has to be bearish. We also added this trade rule to simply check, is the candle high slightly higher with the candle ID number 1 than the candle ID with number 2. So this is something you can also think for yourself. Do you want to keep this kind of block, or do you even want to add more specific rules to this tweezer top and bottom kind of price action pattern? I think this is just pretty much one of the suggestions how you could define tweezer top. It's a very mechanic approach, since mostly, especially, let's quickly check this, on Google you see many pictures, and usually they are always a little bit different, right? Especially when you ask one trading guru or someone else on Instagram or on YouTube or on wherever, they always, in most cases, don't really have a specific rule. They don't have it mechanized, as now you have it actually. And there you have to be precise. How much wiggle room do you want to give that specific price pattern in regards to be valid or being invalid, right? So here I really suggest you to think it through. Do you only want to, for example, define it like here in this picture, for instance, by very small wick size, so both candles for either directions reversals are very strong? Or are you also okay, for example, here with having a little bit more wick, or actually having the majority of the candlestick being a wick, right? So being a little bit more imbalanced in that case. So here you can also really play around, and this is also where the beauty and the fun, in my point of view, really comes in, with backtesting strategies and building these kind of price action patterns yourself from bottom, because then you really understand them and you know exactly why a certain signal has been triggered. Alright, so much to the tweezer top and bottom. Inside the breakout, inside day's breakout, however you want to call it, you simply want to detect a consolidation of a certain time period and then a breakout of this range. Let me give you one of many examples I could give. Let's say we are currently here, so we don't have any clue about what is happening right here. This is, for example, the candle in creation. This is candle ID number 2. And very simple inside breakout price pattern is simply checking, is the candle high with the candle ID number 1 lower than the candle high with the candle ID number 2. Also checking, is the candle low of candle ID 1 higher than the low of the candle with the candle ID number 2. So in simple words, is this candle inside of the candle before? For example, this one. This candle is completely inside of that candle, right? You see the low and the high is completely engulfing this candle. So this is the kind of price action we are looking for. So this is, for example, not the price action we are looking for. They're completely breaking out of each other. So here also this one would be a valid one because it's completely engulfed by the prior candle. Now let's build this bad boy. We go here on the left hand side, trading rules. Now actually when to trade, run per candle. So we stay agnostic on the candle size. We keep it also on current for now. And then our evergreen block, actually we will use trade rule. Let's quickly connect it right here. And here we will again solely base it on candle, and also here on candle. We are looking here on candle ID number 2, here on candle ID number 1. And here we check candle high, is it bigger than the candle high with the candle ID number 1, right? Very straightforward. We also keep the time frame on the current one. Of course, when you are on Pro, you can also simply use the time frame based on input, so you can very simply change it within the inputs within MetaTrader 5, what makes backtesting so much more convenient. And this is already the first block, how we will use it. Now we take the next one, trade rule block. Actually, let me delete this one. Let me just copy paste that boy and connect it like this, because the condition has to be true. And let's call this one actually high. And now we define the low. So we click on it, and instead of high, we change this one to candle low, this one to candle low. Of course, we also need here candle high. So now back to the low block, candle low 2 and 1. Yep, that's correct. And then we also need to change this one to this sign, because now the candle low of candle ID number 2 has to be lower than the candle low with the candle ID number 1. For the ones who want to simply place pending orders on those breakout levels, because it's a breakout play, you could do the following. You go here on trading management, you click here on delete orders. You need this simply to delete the prior pending orders that are on the chart, to simply avoid you take hundreds of trades, right? So now your chart is cleaned again from the prior price levels. Now let's say you also want to make sure that you're not currently still in a trade. So let's say this has to be 0 for both buys and sells. If this is then true, you go here, buy pending order. Let's do it like this. Sell pending order. Connect them already. Now let's check it out for the buy pending order. The open price level. We simply make this based on custom price, based on candle, right? And on the candle low. Actually, I am mistaken. On the candle high. Why? Because now you are placing the pending order on the candle high. So you're assuming, or this is the play of this kind of price action pattern, that the price will continue into this direction. So here simply place it on the high of the candle ID 1. Price offset 0, money management. Let's simply put it at 1%. It's a best practice we simply teach here. And stop loss. There you can get really creative, but let's say you simply want to place it on the candle low. So here custom price level based on candle, based on the candle low of the same candle we're talking about, candle ID number 1. All right, and then the profit, you simply say, well, I want to have a 1 to 2 risk to reward. So you add here 200 of your stop loss, whatever the stop loss will be. For the pending, just in a reverse logic. So here you simply want to open at a custom price candle low of candle ID number 1. Price offset also 0. Money management risk of balance, same as the other one. Stop loss, also again custom price level, but here you want to place it on the candle high. Right, so here candle high number 1, and then again 1 to 2 risk to reward. We close it, we save it, and now you have a full trading system only based on a very simple price action pattern. Obviously it needs tweaking, it needs an adjustment with the ideas you have to make this a viable trading system, but here you already have a fully functional trading system with a very viable price action pattern, often used by retail traders to simply detect a breakout. You pretty much know how you want to define a breakout, to how to place pending order in meaningful manners, because maybe you want to really see a consolidation for 3, 4, 5 candles. So you have to simply add more of these condition blocks, trade rule blocks, one after another, instead of only those 2, or you have completely different kind of angles for this kind of price action. So much to the inside day breakout play. Let's go to the next one. All right, Schlag as we say in Germany, the next price action pattern, one of the very popular ones, which we call Doji, just another consolidation, imbalance kind of price action. Here on the video we see the extreme form or the perfect form of a Doji, right, with a very or almost non-existing body and almost only wick, pretty much just telling us the open price of the candlestick equals pretty much also the closing price of the candlestick. So absolutely pure consolidation. Price has not moved within this candlestick, the time frame at all. And this is pretty much what we are now trying as well to completely mechanize AI as well. So there's zero interpretation of what is a Doji in your trading system. Hence, let's not lose any time and let's get straight to it. So here we again start with run per candle on top based on the current time frame. Of course, you can change this by simply here with a drag and drop, or also making it a variable or an input, so you can easily change within MetaTrader 5 for greater ease of optimizing it. We changed these fields to candle, also this one to candle, and here to candle body size based on pip, and here the candle total size. What do we mean with the body size? Let's look at this beautiful yellow candle. The yellow part is the body and the white part is the wick. Together the wick and the body is the total size of a candle. Let's simply change the candle ID here to 1 and 1 as well, because it is important that we are looking at a candle that is already fully developed. And now we go also to the important part, the adjust part. You simply click on it, you click here on the star, so we multiply it by, let's say, 0.1, so 10%. What does it say? The candle total size is not allowed to be any bigger than 10%. So the body has to be very, very small. For that, we also have to change this symbol to smaller or equal. Let's change here the description to Doji. And of course, I think what is also very interesting, I will make this an input here. So let's call this body size, by default 0.1. Now it pops up here, body size, and now when we click here on adjust, we still see it. So that makes it testing within MetaTrader so much more convenient. And this is already pretty much how you can define a doji. And then when you see, for example, well, it's not strict enough, it's not nicely how I need it, then really look carefully on what you actually need. One of the many examples, it of course really depends on your trading system that you are trading, is that you can, for example, also say you only allow a candle body size of smaller than, for example, the average true range of the same time frame. So this can be also something very interesting, or you want to simply say the candle has to be smaller than 5 pips, then you can also change it here within this trade rule block before triggering then the next block, whatever it will be. Now let me get rid of this one because this is the purest form, and then simply for you, so you can quickly check it out what it is doing, we simply want to show that this one is a doji, so this will now be pretty much marked with a white arrow on top.